Host. Ladies and gentlemen of the crypto space, we're live on a Monday at 11:41 a.m. It's time to figure out the space. It's a new week. The legacy markets look fragile, more fragile than ever. The crypto space as well. It's teetering on the edge in some regards. Um, but we look at the markets differently and we're thinking more strategically and we're attempting to deploy a mechanism for capitalizing on this space different than everyone else. And that's exactly why the Discord forum was built. And we have some incredible conversations going on right there. And Twitter's just hot as always, where I just brain dump all day long the ideas and thoughts that come to my mind. And this topic right now is quite interesting that I'm discussing with myself. And I might as well discuss with everyone else. This is incorporation. And there's a lot of rules and a lot of learning and a lot of interesting things that I believe are pertinent, or meaningful to take advantage of, and which is not necessarily malicious or a bad thing, but it's a means of managing capital consistent with the rules and regulations that were created for these corporations. So let's dig in a little bit and let's see what I've learned thus far. Clearly, extensive due diligence is required, but I'll let you know where I'm at with regard to process and executing on that process. Crypto as a business to incorporate or not. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in stream. God. Hickham's in the house. DJ F. Some. Yes. Barry, my friend. Heirloom. Love your analysis. Thank you very much. I appreciate it. Very much too. We can do better. Repeater. Hey, no, any tips for DeFi beginner? Cash on Aave. Cash. It's cash. The vast majority of persons are exposed to way too risky of assets. Clearly, you can make a lot of capital with asymmetrically appreciating assets, but obviously, asymmetrically appreciating assets depreciate asymmetrically as well, as many people have lost in huge amounts of money over the last couple of weeks. And I myself lost a large amount of money, but being exposed to assets more strategically, moving capital around more rationally, I was able to traverse it and find myself in a decent position moving forward. And basically, it was such things as the topic of today's stream is a manifestation of making decent decisions. I have for one interesting thing is I deferred my taxes this year. I'll be paying taxes in October. There's a 0.5% interest rate per month until October, but I have the cash, and the cash is earning somewhere around 1.5% per month. So I'm outperforming my interest payment by 300%. Uh, so a lot of people may have done this, have deferred their capital gains, but they kept Doge or cum rockets or some silly, horrible, volatile asset, and they find themselves in an underwater position where they no longer have the capital they need to pay their tax obligation. And that's not a position to be in. I have my cash working for me. It's the appropriate course of action. It's the responsible thing to do. It's not easy. It's hard to do the right thing. And so many folks want to outperform the market. And this is what I label and title as financial desperation. Um, but there's also a greed component. So we have our jobs. The appropriate thing to do is to learn how to save money and deploy money to grow money in a novel way, utilizing the tools available to us in the crypto space and more specifically the DeFi space. And that's what we can do. And that's exactly why I'm thinking about incorporating an S Corp, which I have already filed. I filed for S Corp. I have basically the pieces I need to be able to manage the balance sheet, which I've been talking about already. But I know what capital is going to be used to capitalize the corporation. It's going to be a very simple implementation. There's only going to be really two assets on the balance sheet. There's going to be no cash on the balance sheet. There's going to be There's going to be no liabilities on the balance sheet. There's going to be um, no employees on the balance sheet. It's going to be one stockholder of all common stock, and just taking advantage of tax treatment for how the corporation functions, and that's what I'm trying to understand. There's benefits from what I see, particularly how the capital could basically get stuck in the corporation, and uh, S corp is a pass-through entity. So I'm trying to understand because I'll go into this some of the documentation I'm reading, and I'm probably coming up short in some of my understanding, but I'd like to understand more. Um, Chris, we can do better. James, what's up? Destiny, just found you at another interview. I think you're the crypto person I've been looking for. We do things differently here. We don't we don't buy assets that are hype and memes. And sure, people could have made a fortune with Doge, but I don't care. I go to work. I don't have time to babysit a stock chart and wait for it to break out and sell at the top and buy at the bottom. And I follow the chart significantly. This is Bitcoin USD. This is Ethereum USD. This is Ethereum denominated in Bitcoin, which looks absolutely ridiculous. This chart looks so bullish. Ethereum is outperforming the crap out of Bitcoin. And my three charts, which is basically the foundation for the business model that I'm going to be focusing on because I got to get back to work. I have my day jobs, and is curve. This is curve dollar denominated, this is curve F denominated, and this is curve BTC denominated. And that's the name of the game. James, have you heard, read into Magic Internet Money stablecoin backed by YV, USDT, and other interest earning collateral tokens? Looks like Urine and Curve are involved. Well, Urine and Curve are basically derivatives. Urine and Convex are derivatives of Curve, and the data that I see is that stats. I want to go to stats. No, I'm on Ethereum. I go to the DAO. I'm on mainnet. Come on, website. So what catches my eye is the daily lock, since basically Curve Convex Finance has come online. So check this chart out. Let it load, let it load, let it load. So Convex came online probably 3 weeks ago. And as you can see, the amount of daily locks has increased significantly to the point where we're at, look at this, 300, 100. More capital is being locked on average, if you average this out, than the amount of emissions resulting from the incentivization of liquidity pool participation. And that means it's a net deflationary protocol now. Combined with the supply emissions reduction in the coming months, according to the emissions schedule, a deflationary pressure is capital appreciative. To top it all off, Convex and Urine providing such derivative assets with revenue sharing components, and and with Convex and the additional monetary policy slapped on top, it's extremely lucrative to the tune of 130, 140%. I was up at like 160, 170% like 2 days ago. Extraordinary returns, such that I'm just starting a business and I'm going to run it as a business. Literally just owning like Curve and CVX, CRV. That's just a business. You have two assets on the balance sheet that's generating a revenue stream, and then the whole thing is to understand how that income is treated. Let me hit the comments and I'll talk about what I'm seeing. Matthew, thanks for having us. Yes, this is my favorite time of the day where I get to talk to everyone. Adri, hello, hi. Frank's in the house. Drizza, good morning. Destiny, I'm interested in learning about Convex. I heard it was amazing. Convex is a derivative of Curve assets that is extraordinarily lucrative. The That's it, because one, the most important thing is the emissions are in Curve, and Curve is contributing to supply disruption. The more Curve you have, the more business you have, the more power you have to generate a recurring revenue stream based on transactions on the forex of the crypto space. I'm seeing, I'm starting, as I've often said when I've had other investments, like I was heavily invested in Polygon and rode it from like 65, 70 cents up to its highs, and we let it come back down, and it has had volatility since then, and I expect it to appreciate significantly. But watching the asset go up and down, and knowing that I have a day job to go back to, I don't want to be exposed to that kind of volatility. So, as much as I did a large exposure to that play over the last couple of weeks, and folks in the Discord know, I've always talked about the business model, the balance sheet, and our goal is to deploy the balance sheet as optimally as possible. And really, the optimal deployment of a balance sheet is the least amount of work required. And that's what I'm getting to. And this is a very interesting statement that I'm reading. S corp distributions are generally tax-free with certain exceptions, which means you have to be an employee. So you can't just take all your capital from the S corp as a distribution. So you have to be a reasonable employee. So what's the most reasonable employee? If you have your capital deployed in the crypto space, you're basically an accountant. You're managing money. You're managing the business, literally just the balance sheet and the distribution of capital. So that's really all it is. That's what everyone's doing that's investing in crypto or investing in the DeFi space. You're accounting for capital management. So it's the most logical role if you're contemplating incorporating. You be the accountant. So what you do is you Google the average salary for an accountant, and that you could have as your salary for 60, $70,000 a year, $80,000 a year, maybe. Heck, probably the best thing to do is look up the average salary for an IRS agent, and that's your salary. So it's probably like $40,000, $50,000 a year. And then, as desired, you could have distributions from the corporation, which is generally tax free. And now I have to look up the obligation, the tax obligation for the individual receiving S corp distributions. Um, so the employee, when you take your $40,000, $50,000 a year of employee tax as an accountant for the corporation, the corporation is going to have to pay Medicare, Medicaid, and Social Security taxes for the employee, and there's going to be standard income tax associated with that salary. Um, but if you could have only a portion of your income from salary and then a portion of the vast majority of the income from corporate distributions, that is going to be a substantial tax treatment as compared to paying full on capital gains as a standard U.S. citizen. Um, what's interesting is the distributions cannot exceed the initial amount of capital used to capitalize the corporation. Um, I mean, if you put like $500,000 into the business, you can't take anything more than that. It's here, look, if a shareholder's stock basis is 10,000 and the shareholder receives a distribution of 12,000, the excess distribution of 2,000 will be reported as long-term capital gains, which is quite interesting actually. So if you put $50,000 into a business and you take a distribution in 2021 of $75,000, that $75,000 $25,000 is long-term capital gains. It's not even short-term capital gains. That makes a massive difference on tax obligation as compared to just a standard normal uh, income treatment. Makes a massive difference. So this is complicated, and the bookkeeping is going to be interesting. I'm going to grab some software. I got a little OSX parallel set up. I got some TurboTax software. I'm going to have some QuickBooks software. I'm going to call it a day. Two assets on the balance sheet, one employee. Can it get any simpler? Not setting up a massive corporation here. One person. Anyway, it's quite interesting. Um, James, wild to see. Hilda, great content. Thank you. I mentioned Destiny. Convex it's just a DeFi protocol. I didn't hit on your answer as best I could. So I usually advocate for new market participants to focus on cash on Aave, and you can entertain cash on Curve. And I'm at the point where cash on Convex is a reasonable location for capital. frankly, the vast majority of my capital is actually denominated in CVX CRV on convex finance, for what it's worth. Hickam, let me hit Adam. For someone wanting to create a long-term position in VECRV, do you recommend buy now, wait for curve on Polygon with booze, or just get CVX something totally different? So my play is CVX CRV. Now, clearly, I don't feel that much risk. I just don't. There's something about it that makes me feel comfortable. And that's how I've chosen to proceed. And I don't, as of right now, either YVE CRV from Yearn or CVX CRV from Convex is the superior opportunity as compared to locking for VECRV. So at least with those two assets, you have tokenized VECRV, and that's a very powerful position to be in. At least it provides optionality and compounded yields from multiple sources into a very strategic and powerful derivative product. So that's your choice, Adam. And of the two, I would probably lean on CVX CRV. It's proving to be substantially more functional and lucrative as compared to YVE CRV. Do you think there's any debt arbitrage between CFI and DeFi? CFI is too slow. You can't really do much. It takes forever. It's not efficient. So I don't think so, nor do I have the time to deploy such an arbitrage strategy. Um, Adam, new here, but really enjoying your content. Thank you for sharing. You're very welcome. More content to come. Jackson W., any idea if DeFi insurance would be deductible as a business expense? Well, if you have a corporation or not as self-employed necessarily, you have to have a 1099. So you would have to incorporate, but that would be a business expense. And then all the rules of a corporate expenditure are followed, and then that makes logical sense. Um, so that is something to consider. I currently don't have any insurance products for what it's worth. These systems are not as risky as the general public or traditional finance persons would lead people to believe. I've seen them operating for all these years. It's almost 2 years at this point. And there no doubt is risk, but it's so stark the difference between the risky protocols and the major protocols that are built by very powerful developers. And I myself am an Android software engineer, so that gives me a great deal of comfort when I see a piece of software built by a developer that knows what they're doing. There's a certain degree of, of, of expected reliability and function. Um, I know some brilliant programmers. I'm not the most brilliant programmer, but I know what brilliant programmers are capable of. And some of these protocols are built by definitely brilliant programmers. What token is better than Cumrocket? Anything, literally anything. Dean, I do not have any Matic at the moment. Um, Matic, Matthew, are you slowly exiting your Matic? Been a volatile asset position to move more into CRV CDX? Yeah, I haven't had Matic for a bit, probably 4 or 5 days, mid last week. Um, Ernie, thank you, appreciate it. What would be the min amount that you suggest to start a corporation? Is 25 going to be enough to gain any value by being an S corp? Well, it's all about tax treatment, and I'm still trying to understand the subtleties um, of how to deploy the employee, which would be yourself, and how to manage the books and how to file the required ta tax reports, um, the bookkeeping, and the distinction between distributions versus salary, and there's a lot of subtleties. It's not just filing, a W-2 or even a 1099 on standard TurboTax. There's more nuances, and it's literally a separate entity with a separate social security number called an EIN. So that's what I'm looking into, and that's what I want to deploy because I want to operate this thing as a business. And I don't. The point is, what I'm hoping to get out of this structure. Let's say the corporation makes $250,000 a year. As an accountant, I'm going to take 50 grand worth of salary because that's what an IRS auditor gets, and that makes sense. and I'll pay my income tax on that, 33,000% or whatever it is. As required or as desired, I'll take distributions, which will have a different tax treatment, and the rest of the capital is in the corporation. And to my understanding, I don't. There's no tax obligation for an S corp. It's a pass-through structure. So then I have to look into the tax obligation for corporate profits from the revenue stream. It's not capital gains. It's a revenue stream. The tax obligation for the shareholders. Since there's no distribution, there would be no dividend on the vast majority of capital. I'm pretty sure. Well, I'm hopeful that if you don't draw capital in the form of a salary or a distribution, it's not taxed, which means that capital is able to be redeployed as working capital. Um, and that makes sense from a business perspective. If money is not consumed either as a salary or a dividend or a distribution, the corporation just has growing working capital. That would seem like something that's well structured from the taxman perspective to facilitate business growth, which is better for employees, and that's in the best interest of the country from from a growth perspective. They want corporations to grow and accumulate more money to do more business, to build more things, so on and so forth. So I'm just looking into the subtleties of how that works. And I'll refer to accountants. I'll probably end up calling an accountant for additional information. But this is something that I'm going to do myself, and I'm going to figure this out. I'm going to manage it myself because I can. He's taking LP tokens on Convex as well. Yeah, I got cash on Convex and CVX CRV. Shale, can't believe Noah doesn't have more subscribers yet. I guess I'm early. Not a thing I'm used to on YouTube. Yeah, I wish I had more subscribers as well, but it's okay. I help as many people as I can, and I enjoy my stories on a daily basis. We've been only doing this for about a year and a half, since probably summer last year, give or take, early summer. Maybe it's only a year. Over 300 streams at this point, though. Pretty cool. Um, Daniel, enjoying your content. I'm using the balance sheet strategy. I'm out of cash right now. The only problem is moving into Ether, Matic instead of BTC. I'm having trouble letting go of BTC. So for myself, I've been able to retain one Bitcoin and 32 Ethereum for the node, and I will not be. So Ethereum is outperforming Bitcoin. I've talked frequently about capital moving from underperforming assets to outperforming. So if you look at the Bitcoin chart, I mean, Ethereum is significantly outperforming Bitcoin. So that's quite meaningful. And in the short term, Matic has been significantly outperforming Ethereum, but that's increasingly volatile. It's not a macro cap asset. There's only two macro cap assets, and that's Ethereum and Bitcoin. And they have all the network effect. And I don't want to over allocate to these assets anymore. I just don't want to. I want a significant cash position, and the rest I'm deploying as a business. So the deal is exactly what I said on Twitter last night. If you have a business that's worth $1 million and the property value gets cut in half to 500,000, no business owner in their right mind is thinking about selling a business. No business owner is even thinking about the value of their business to even contemplate selling it. All a business owner cares about is their revenue stream, is their money machine. So it reminds myself the principle is irrelevant. What matters is how much money you're making on a weekly basis. So operate this thing as a business. Report the capital as a business. Incorporate to operate as a business. Treat it like a business. There's no reason to buy and sell the business. Only in crypto do folks buy and sell the business. That's the strange, the contrarian way that I've begun to think of it. There's literally no reason to liquidate assets that are central to the business, that are the business, and that's really Curve. It's a dividend-bearing instrument that offers a recurring revenue stream of platform transaction fees, and now we have a capacity to tokenize VE Curve into CVX CRV and YVE CRV, and these assets are central to a very logical business implementation. Um, let's keep it going. How do you keep track of allocations? Spreadsheet. Well, two things. Zapper and I use Delta app. That's it. I don't have many allocations. I used to be spread too thin, and then I told you guys never go all in, never spread too thin. And clearly, my ideology and narrative has evolved over the last couple of years significantly to the point where I don't need to own many assets. And the vast majority of my capital right now is in one asset. Um, Large cash position, the optionality. If the market goes down, I'm going to pile into my preferred asset. And I'm going to take my business cash flow and I'm going to grow the business by compounding that preferred asset. I'm going to draw a salary off that as per S Corp compliance requirements. As an accountant, I'll be handling the books for the company, be managing the taxes for the company, which is an accountant, and be the sole shareholder, and so on and so forth. So this all seems very logical to deploy. Uh, it's pretty interesting. So on a balance sheet, as Michael Sauer talks about, crypto is an intangible asset. Um, and you have to report its value, and you're sharing, you're using these assets to capitalize the business. And for instance, I'll likely have no cash. Well, there'll be cash on the balance sheet, but optimally, there's not necessarily cash because you're just going to compound the yield into more working capital to generate more yield. And when you uh, draw your salary and your distributions, it's literally just using the bank account as a pass through. There's almost no reason to hold cash because then it comes back to everything I talk about on Twitter that cash is a guaranteed loss of money. And I'd rather take risk than a 100% guaranteed to lose money no matter what. So there's no logical reason for there to be any cash on the balance sheet, or at least non functional cash. So, for instance, my cash is currently deployed in a curve pool, generating 20% returns. So I guess that is cash, just curve cash. Why is Curve so strong? It has full-on network effect. It has more cash than most centralized exchanges, except the big boys. It's one of the largest holders of stable coins in the world, and it has this one of the most powerful monetary policies of all DeFi platforms, decaying hyperinflation coupled with what is now hyperdeflation. Convex has taken the deflationary pressure that V curve was deflationary unto itself, created deflationary pressure. Then YV curve just amplified that, and then CVX CRV just took the deflationary pressure on curve to a whole new level. As you could see by the lock statistics being over 100%, which means the protocol is net deflationary, where the decaying hyperinflation is effectively incentivizing the crap out of pool participation, yet the protocol is net deflationary. That's crazy. So the current monetary policy is on a whole new level compared to central bank monetary policy and what sovereign countries have been capable of achieving over the last forever. 103 people in the stream. Absolutely extraordinary. I'm proud. Thank you. 32 likes. We can do better. But I see so many people on the stream, and I know folks are wanting to do things differently. We're faced with potential significant depreciation in the markets, and I'm not even looking at the legacy finance charts. You look at the S&P 500, you look at the Nasdaq, you look at the Dow Jones. These things are in the largest rising wedges I've ever seen. All you got to do is follow a couple of folks, the legacy finance folks, and everyone is screaming bearish implosion. Now, I could talk about legacy finance, but that's something I don't overwhelmingly want to digress into. But I expect significant volatility to the downside, which is why I'm not exposed at all to hyper volatile crypto assets. Um, I have small 1% here and there. I got my Bancor, I got Polkadot, Cosmos. These things are like a 0.5% of the portfolio. And that's the way you really play the risk assets, the volatile assets. And that I think is rational and reasonable. I just can't process like a portfolio just of Doge and watching 70 cents turn into 20 cents and just destroying an entire portfolio. That's just not the way to execute capital management effectively. Yellow Mellow, good luck with the S Corp. I'm studying for the CPA. I'm excited to watch it play out for you. Thank you. I probably have more questions than answers at this point, but from the documentation that I read, I know how to get started. Um, I have the capacity to capitalize the balance sheet. I have a capacity to define myself as the accountant for the corporation and draw a reasonable salary as per S corp rules and regulations. Um, I have a capacity to generate a revenue stream, which means I could take distributions as needed, or I could just keep the capital in the corporation uh, to deploy as more and more and more and more working capital to grow the revenue stream. Everything sounds like a business. So I'm going to deploy this shit as a business. Makes sense. ETH outperforming BTC, Hex outperforming ETH, but nobody has selling Hex. If you're not realizing capital gains, it doesn't mean anything. So unless someone's drawing like $1,000 a day cash out of their Hex position, it doesn't mean anything meaningful. You welcome DJ Efsum. Yes, sir. Mark, I know merchants thinking t-shirts. We can do better. That's a nice one. I wouldn't mind some merch. That'd be cute. Oh, wait, I missed a comment. RJ, would you say most pools that are on Curve are equally trustworthy? No. Completely different risk profile for all the pools. Um, for me, Aave pool. Not even three curve. Three curve is significantly imbalanced. 3-3 pool is significantly imbalanced at this point. So I'm leaning on Aave. And you're not going to be able to do that on curve directly because the quantity of VE curve you need for max boost is huge. But you can do it on convex. And the Aave pool is pretty cool, cranking out 21% right now. Igor, can we say the same revenue stream about nodes and staking without using AMM at all? No, because nodes and staking are inflationary. Um, Unless you're talking about like EIP 1559 and F 1.5 or F 2.0. And there's a burn component, so folks are expecting Ethereum to be net deflationary. So staking with regard to like old school UTXO, POS and masternodes, that's pure inflation. And that's capital destructive. So you can't really operate that as a business. You need deflationary pressures. You need a sustainable monetary policy. That's the way it is. Allie's in the house. Damn, 30 minutes late. It's all good. We're still here. Cash, thank you. Trying to do things different around these parts. Yeah. Mike, you're very welcome. Kill us. Whoop, whoop. James, Section 88, asset rollovers are crazy. Well, you see, look, gonna have to look into this stuff, and I'm digging. What up, Noah? Matic pulling back price corrections is as expected before a move up. It's a volatile asset. It has moved up significantly over the last months. No, there is no guaranteed move up. I know that long term, I would expect it to appreciate. But the best thing to be said, there's no way to know whether it will continue appreciating in the short term or we'll have to wait 2 months, 3 months, 6 months, a year. And all I know is I don't want to wait. So, as much as we were talking about Matic and being extremely bullish on Matic, the appropriate course of action is to hold no allegiance to assets. And opportunity cost is paramount. If an asset's depreciating, you cut it go. You cut losers go. And it's not a loser in the sense that Matic is not an awesome platform, ridiculously meaningful platform. But remind everyone that I'm more interested in the platforms themselves than these assets. I'm more interested in the technology being deployed than the assets, like Matic versus the Polygon network. Fascinating tech, and I want to use this tech to capitalize and put capital to work in a business type of operation. So, in my mind, I have assessed that Matic is an opportunity cost right now. There's plenty of folks on the Discord forum that they have capital on Aave and they're borrowing and they're redepositing on Aave, or they're borrowing cash and they're depositing on Curve, Polygon, and they're putting capital to work. There's no reason to necessarily exit the Polygon ecosystem. That's a viable implementation of a business model as well. But I right now see opportunity cost, and that's why I've redeployed to the convex space. Um, there is no perfect way to operate the business. There's no perfect way to execute, a balance sheet approach to portfolio management. All there is a necessity to maintain rationality, deploy good reason and logic, pivot, hold no allegiance, avoid opportunity cost, maximize gains, pursue yield, and um, and do better. That's all there is, my friend. Got to make pivots. Um, wow, you guys are cooking today. You're cooking. Any thoughts on the Luna ecosystem? It's off my radar right now. There's just it's a separate ecosystem. What's required for these different protocols or different platforms is interoperability, and as that interoperability grows and becomes seamless, um, then you can have capital flow. If there's no easy capital flow to an ecosystem, I don't really have much interest in it right now. Um, what's up, Noah? No, hit Sunny. Please say again. We can do better. That's right, Dawkins. That's right. Killa says, Noah, have you ever used TRC20 to transfer to USDT? Would hear your opinion on this. I have zero interest on Tron. Negative interest. I have maybe less interest in Tron than I do on BSC, and I have zero interest in BSC. Is the Matic pool and quick swap still on your plays? What's the time horizon on Matic and Indian narrative? Time horizon can be large. I thought it was imminent, and it was. At 70 cents, it ripped to like 260, 270. Of the capital gains I've achieved over the last year and a half, there was only three big plays I've ever made, and that was Synthetics, Kyber, and Bancor back in March of 2020. Rook from 65 to 800, and then Matic from 70 cents to like 260, 270, or whatever the heck it was. And those are some very large plays. It's very rare to deploy such a large amount of capital expecting principal appreciation. And right now, I'm kind of completely shying away from that entire enterprise. I don't want to day trade. I don't have time to look at the charts. I babysit the charts because I look at the charts. I love the charts. The charts are great. They tell you how the system is doing, tell you the trends, whether it's going to break bullish or it's going to be bearish. And Bitcoin's just right in this damn support line. It's driving everyone nuts. Best part is there's only about a day left, and we're going to find whether this is going to break up or break down, be either later today or tomorrow. Ethereum looks much better. It's above the support line, has breached resistance a couple of times. This is the zero point 0.5 fib retrace, and here's resistance above head in the green line. So, a rip up to 2,900 is going to be a heck of a breakout, and I can imagine Ethereum breaking out versus Bitcoin. Pretty cool. Um, Ditto, just listened to your interview with Tiki, and I have to admit I am hooked. Your macro perspective is absolutely refreshing, insightful. I'm eager to adapt my methodology. Thank you. You're very welcome. And we could do better. Just this is not gambling. Um, this is something. The reason I'm so passionate about this is because we have to do this. I don't. You can't keep cash in a bank account. It's a guaranteed loss of value. And this, the legacy financial system, particularly equities, REITs, and bonds, I just see too much opportunity cost. I have equities, but the vast majority of my capital is not in them. The time horizon on the equities is probably 5, 10 years. That's my time horizon on them. And I'm sure as hell not going to be buying stupid tech stocks. That's worse than freaking Doge. Doge has outperformed the crap out of Microsoft. So, which means how do you navigate the crypto space is really the only logical way to deploy capital nowadays. Now, proponents of legacy finance will cite risk and risk. Yeah, there's risk in the legacy financial markets. They're operating in markets that have the largest rising wedge in the history of rising wedges. Sven Hendrick, Sven wedges, massive wedges, and these people are saying the crypto space is risky. They're out of their minds. Out of their minds. Incredible. Adam, what do you think about the deflationary pressure from EIP 1559 if most transactions are going to be going to second layers like Polygon? Deflationary pressure is going to be significant. I expect Ethereum 1.5 to be the end of the road, and I think Vitalik and folks are going to focus on securing the blockchain, proof of stake, third to F is going to be significantly meaningful. And L2s and roll-ups and side chains, POS side chains like Polygon are going to take center stage. And the vast majority of transactions will be there, and Ethereum will become mostly consensus and a source of truth. And I like that. I think that makes the most sense. Live W, I had a good weekend. I'm back in action though. Matthew, just discovered this channel last week. It's the best DeFi channel on YouTube. Thank you. I appreciate the sentiment. Michael, Vatican's also up 7,000% last year. Yes, but that does not. It had a different narrative when Aave and Curve deployed on the network. Everything changed, so that's not too meaningful to me. Which is why I deployed a huge amount of capital when it was 70 cents, and I should have deployed it when it was 30 cents when Aave deployed. I kind of saw that playing out, but I'm never the first to the trade. Um, but I usually make the right trade, and that was a good trade with Matic. Very profitable, just deploying on Polygon, and the experience I had on Polygon was extraordinary. That's a great ecosystem to manage capital. I mean, anyone who's new to this space, please cash, stablecoins. Start there. Stop buying assets. You need to have a rigorous strategy. You need to have rules. You need to know what to buy, how much to buy, how to manage the capital. You can't hold allegiance to an asset. If you're not in that position emotionally, stable coins and get interest. Because Aave at 10% makes Wells Fargo seem pathetic. And focus on work and save your money. That's what DeFi is. It's a renaissance of what our parents and grandparents would scream over. Because right now they're earning nothing in a bank account, minus 15% real interest rates on a bank account. Meanwhile, you're getting 10%, which is minus 5% in an Aave bank account. But on Curve, if you're earning 20% on dollars, you get 5% real interest, considering debasement and all. But we now have an opportunity to outperform debasement, which is something that you cannot do with REITs at 5% and 10% REITs questionable. And the fact they're probably zombies anyway. That's my problem with legacy finance. And I wrote a tweet about that probably a couple of days ago at this point, where most securities are zombies, most REITs are zombies, bonds are giving you pathetic yield, so no one in their right mind as a citizen and retail is going to buy bonds. That's for corporations and pristine collateral. And basically, that's the old school financial way of doing the same shit that we do with Aave and Curve. That's why they buy bonds. It's collateral. They could borrow against them. But we can't do that as a retail participant. Hey, I go into my Chase bank and hey, Chase, here's a bunch of bonds. I want to borrow 25 grand. They're going to look at you and be like, huh? So we just can't do the powerful things that we're doing in DeFi with legacy finance. And that's basically disintermediation of financial services. 104 people in the stream, 61 likes. We can do better. Can you explain to me, like I'm 8 years old, how deflationary pressure is a good thing? Deflation of circulating supply, less circulating supply is supply disruption. Less supply in the face of the same, if not increased demand, is price appreciative. If you have 5 loaves of bread on a shelf and 10 people walk into the store, I'm going to go to the cashier when someone wants to pay $5 for a loaf of bread. I'm going to say, I'll give you 6. Then someone else will say, I'll give you 7 because they want the limited supply of the loaves of bread. Deflationary pressures is the most powerful appreciative effect on assets. I love Aave as a company, but does the success of their company make their coin average go up? You are right on target. I love Aave as a project and protocol. I've held Aave in excess over the years. I'm pretty sure it's still incredibly lucrative. It's like 20-something% yield on Aave Polygon. There's too much opportunity cost. Too many assets are outperforming it. And deploying the capital elsewhere is much more appreciative and effective at generating a recurring revenue stream. It's a red herring. Uh, and also, it's also a red herring if the Aave asset depreciates has no implication for the protocol and how systemically meaningful it is. It's a money market. When you deposit your capital in a bank account, the savings account, they throw it in a money market. It's the same thing. That's exactly what Aave is. Aave is a money market bank account, and Curve is a forex market. There's no doubt in my mind that is the appropriate classification. Hickam Tron, Tron. No words for Tron. Bitta's in the house. Bitta, hi Bitta. Always a pleasure. James, 100 streamers. We need more likes. 101, 63 likes. You know the drill. Adam, where do you think those interest rates are coming from? Like someone has to be willing to borrow a certain rate for us to get crazy lending rates. So on Aave, the interest rates come from borrow demand. So as borrow demand goes up, variable rates go up. So the interest rates on Aave come from borrowers paying interest on their debt. Aave is the hallmark of sustainable yield. Um, Other platforms' interest rates are derived from transaction fees. AMMs, so you put in your cash on like Ethereum USDC on Uniswap and you get like 30% on your money. It's from transaction fees. And then you have monetary policy strapped on top, like Curve's emissions. So a Curve pool generating 10%, but then 30% incentivized emissions is coming from their monetary policy. Their monetary policy is the same exact thing we talk about when we talk about sovereign currencies. They have emissions, more of the cash is introduced into circulation. But what's innovative and novel about DeFi is the deflationary pressures. So I model DeFi on sovereign monetary policy, and I think heavily on central bank mode of operation when I digest how DeFi has crafted monetary policies. What is the emission schedule? How much inflation? How much supply disruption? Is there a burn component? Is there incentivized supply disruption? Literally using inflation to create a deflationary pressure. And then you got the Bancor monetary policy. So Bancor is an extraordinary topic of conversation because their monetary policy is far superior than sovereign central banks. Now, probably the best and most interesting monetary policy in the DeFi space, mutually exclusive to their asset price. BNT is historically one of the most volatilely priced assets I've ever seen. It's meaningful. And this goes into like Aave the asset versus Aave the platform. I can't see myself holding Aave. It's just too volatile. I have some cash on Bancor in the form of BNT. I can't deploy excess capital there. I need, albeit those single-sided LPs are quite interesting. The complexity is it's denominated in BNT, which is an extremely volatile asset. Now, it's nice when volatility is to the upside and appreciative, but that's not guaranteed. Volatile assets depreciate asymmetrically as well. So, Adam, the yields are very real. They're sustainable. They will fluctuate. Incentivized emissions will be diluted. They will decrease because most of them are decaying inflationary emission schedules. Base APY from transaction fees will likely increase over time as more and more capital flows on these exchanges. So I expect very interesting counterbalancing effects to occur over the coming years. Obviously, inflationary emissions may go away. May never go away because look at Bancor. Bancor literally protects impermanent loss with inflation of the protocol, but then it has the vortex burn component, which burns the VBNT from transaction fees of the platform, counteracting the inflation with a deflationary pressure. Absolutely tantalizing from a monetary policy perspective, and probably on par with awesomeness of which Curve has created. Be a Curve's throwing around 135% because Convex's derivative has its own monetary policy, which CVX is generating 55%. I've seen that 35 to 55, give or take, which is creating a depreciation on CVX. I expect. Can you imagine if the yield, which is on CVX, which is generated from platform transaction fees, if that exceeds the yield on CVX CRV, CVX is going to skyrocket. That means the emissions of CVX CRV are just going to literally start piling into convex. That's an interesting one. That doesn't mean the emissions or the capital flow into CVX CRV is going to decrease, because ultimately underpinning why that capital flow occurs is because it's a position in the curve, which is the position in curve, which is the CRV asset, which is also a position in the curve platform, which is a revenue share in the Forex market of the crypto space. This is straight up awesome, guys. It really is. Anthony, if you're earning rewards on an Aave Polygon and Matic, would you suggest just instantly switching those for stablecoins? No, not necessarily. There's no easy answer. Sometimes accumulating assets are great, especially if you're compounding them. Stablecoins are meaningful too. A portfolio, a balance sheet is a combination of principal that's assets as well as cash. And then you take on debt in the form of cash, but in crypto you can take on debt in the form of assets. And just as a corporation handles a balance sheet, the balance sheet is a combination of principal and debt to use as working capital. Fascinating that in crypto you could take on assets as debt. That's extraordinary. This is going to freaking blow the minds of anyone that ever gets audited, because the IRS agents can be like, what the heck am I supposed to do? This guy's books are all in order. It's filled with no cash and all assets. They're just going to be like, all right, here, I don't even know what to do with this shit, because it's all consistent with proper tax treatment, and it'll be nothing comparable to status quo corporate filings, but whatever. Literally a business operating with pure assets on the balance sheet and no cash. Sure, maybe you have cash, but point being, the vast majority of capital is assets, and those assets are generating the business revenue stream. Man, that's crazy and awesome. I really feel bad for an IRS agent if I get audited for 2020, because I'm fully compliant. Token Tax is cranking out a hell of a tax return for me, and the IRS agent's going to get a stack of transactions, about 4,800 transactions I did in 2020. 4,800. So can you imagine an IRS agent having to figure out the cost basis for crypto assets? 4,800 of them. So I feel bad. I won't have any additional taxes due because I'm having my taxes professionally done, and so anyway, that's another topic. Let's wrap this up, but let me hit these questions. Burrow, awesome channel. Thoughts on ETC? No interest, my friend. So, what smart man expecting downside volatility in the equities markets? Do you think a younger man holding Ethereum and 2 or 3 other digital assets while having a healthy amount of dollars is bad? No, that sounds very nice. You have time horizon on your side, and that means everything. So, I myself am older. I'm 38, and I'm going to hold 32 ETH. I don't care if it goes down or up. I'm holding 32 ETH because of the significance of a potential revenue stream. And I will be putting that on the balance sheet of my corporation when the 32 ETH reaches critical mass and generates a decent revenue stream. Otherwise, it's just going to sit. That sounds like a healthy quantity of assets. And dollars, because your dollars have to be put to work. Don't forget, every asset on the balance sheet needs to be put to work. If it's not being put to work, that's an opportunity cost. Idea, don't mind holding ETH, but like you've been saying, sometimes the dollar is the outperforming asset to the downside. So capital flows optimally from underperforming assets to outperforming assets. When you have a depreciation in the global markets, a deflationary event, dollars are outperforming. Food for thought. That doesn't mean sell all your assets for dollars and try and buy low and sell high. That just means you have to think about it more. There's no perfect way to manage this capital. I hear your flow in and put various protocols contracts over these last months. Where do we hear about these new contracts in order to adjust your business? GitHub? Um, well, it's important to review contracts. It's important to extend due diligence for these new protocols. Uh, no, Twitter. Twitter is the message board of the world. You hear anything meaningful about new projects, it's Twitter. I'm rarely ever interested in new projects. I will not deploy, on average, capital to new projects. I am very risk averse, in my opinion. Adam, love it, Noah. You're crushing it, and like others have said, it's crazy you don't have more followers. Thank you, my friend. Time will tell. Jordan, you just subscribed last week. Really enjoying the content so far. You're very welcome. It's a pleasure and an honor to help as many as I can. Look at the markets differently. Gamble less. Focus on revenue. What what's the link to the Discord? It's in my Twitter profile. I'll put it in the stream here. Great group of people up in Discord. 24 hours a day, 7 days a week. Everyone is helping everyone. There's always someone there to answer questions, and they're good people. And that's what we need more of. We need good people to help people make better decisions. What's the Koa style? Will you use Thorchain if they do the uncapping? I will use it. I don't have any interest in allocating capital to it. That's my current status. DJF some, if we keep asking questions, will you keep streaming? Yes. That's what I'm here doing. But I have to go because I have to go back to work. But I'll be here tomorrow. I'm not going anywhere. So, and I'm also on Discord, guys. So this is fun doing the streaming and talking to you guys in person. But there's always tomorrow. And I always say to my wife, anything that can be done today, we could do it tomorrow. And she really gets angry when I'm kind of referring to like laundry and stuff. But Discord's 24/7, boys and girls. It's cool. I literally have KO says I literally have $100 and can't get my native rune in it because it always capped at the moment. Not something I'm interested in at the moment. But cross-chain interop is significant, and from a protocol and functionality perspective, very meaningful. Windy Wavy. You're very welcome. Heirloom, you have a good one, my friend. Always a pleasure. 12:30, 8 p.m. on a Monday, June 7th. It's a wonderful time in the markets. We're going to have extreme volatility, but this is the best time ever to contemplate doing things differently because we have new tools, new strategies, new services, and functionality to allow us to deploy assets as a corporate balance sheet to generate a revenue stream, just like a market maker back in the 80s. That was a business on Wall Street. You know, the guys in the vest down on the floor of Wall Street waving around their pink slips and shit. So we could do that business now because we have automated market making services. We have incentives with monetary policy. The opportunities are profound nowadays. So no more buy low, sell high. No more risk assets. I don't care if Doge goes to 10,000 frickin' dollars. I have no interest in it. I'm going to allocate capital to things that are meaningful, things that make sense, things that are rational, things that I could go to Thanksgiving dinner and tell a story, and people are going to be like, "What the fuck? Holy shit!" Because Doge is not a story that's interesting. That's some gambling. I might as well have gone to a casino and put $1,000 on a blackjack hand. Got to do things differently. Wish everyone a wonderful day. Tell everyone to subscribe, and I will see everyone tomorrow. Peace.